All right. Good morning. It is Thursday, April 10th. We had our first mini class yesterday, and here's your second mini class. We're going to have a little review, next steps, some Q&A, little scripture, and results. That's what I'm going to talk about right now. So, review. Yesterday, open your brokerage if you have not already opened it. Fund your brokerage. Buy one thing. Now, if you're brand new to this, it's going to take a little time to fund the brokerage. You can open it in one day. You need to be prepared to go through the steps that the brokerage that you're going with says. Funding it could take a couple of days. Talk to your brokerage. Have it walk you through that. And then buy at least one thing. And if you've been here for a while and still haven't opened your brokerage account, what are you waiting for? What are you waiting for? I've been here for years telling you to do that. Tomorrow is Friday. If you're listening to this, make sure that you've called a brokerage and started the process. This is about having the faith to step out in your finances so you can get the freedom that you want. So I named the group Faith, Finance, and Freedom. All right, next steps. You've opened your brokerage. You've funded it. You bought one thing. You know how it works. Now is the time to open up an account for your children or your child if you have any. It's called in America a UTMA. Now there are people that reside out of the country. There's someone from Ireland. We've got our awesome neighbors of the north, some Canadians here, and we even have people from South Africa. So that's really amazing. I am sure there's a way to do it in your country. You're just going to have to do a little more work to find out. Ask your brokerage, can I open an account for my minor child? Now, in America, it's called a UTMA. I call it an UTMA. I don't know if people in the financial world call it that because I'm not a financial advisor. I'm not a licensed fiduciary. I'm just letting you know what I've done as a mom, as a homeschooling mom, as a mom in a one-income family making less than 6 figures a year, got out of debt, paid off $92,000 in a single year, and then 5 years later became a millionaire. That's why I'm here to pass on this knowledge so that you can do it too, okay? But really, I started discovering all of this in my 50s. It's a little late is what I thought, but you know what? It doesn't matter when you come to the party, just come on in. And for me, it's really about leaving a legacy, leaving something behind, making my children better off, not just financially, but mentally, physically, spiritually, making them better off. So I want to set them up. A UTMA stands for Uniform Transfer Minors Act, something like that. It will allow you to start an investment account now. Can you imagine if somebody did that for you as a baby? When you were first born, if somebody opened up an account for you and it had 60 years to grow, you wouldn't even need to worry about Social Security. You would not need to worry about a 401k. You would be set. So open that up for your child or your children. Put some money in it. Start out with $10. That's what I did. I'm not telling you what to do. You do what you want. But this is what is going to give my son a retirement, even if Social Security is not there. Put I put his birthday money in it. When he got his first job, we put a specific percentage in the account. So as I said last time, he's 22, he's got about he had $22,000, the market dropped, so now it shows there's 20,000. He was making $450 a month, and with all this craziness in the market, his monthly dividend keeps growing. He's making $480 a month now on that account. Even if he never puts another penny in, it will fund his retirement for a couple of million. So this is powerful. It's compounding. You got to step out in faith. All right. Missy, you were so awesome. Good to see you here. I'm going to go to the Q&A right now. I'm going to look through some of the comments and some of the messages that I've gotten. A couple of people have asked me. All right, I'm going to start with the tax question first. Somebody asked me, when does the income become taxed? Thank you, Danica, for that question. Now, I gave her an answer, and I'm going to expand on that answer. Yeah, taxes are coming up. Dang, it's April 10th. Taxes in America are coming up in 4 days. Get your taxes done. Don't get any late penalties. All right. Generally, in a regular investment account, your gains will be taxed, but your gains are called unearned income because you're not going out to sweat for that income. You're putting it in an investment account. You're telling your money to go work for you. You're not earning the money by doing labor like at a regular job. That is called earned income. When you go out and sweat for it, you're earning it, earned income. When you tell your money to go work for you and let your money do the sweating, it's unearned income because you're not doing the labor, you're letting your money do the labor. So, when you go to work and you get your paycheck, or when you got your first paycheck, if you remember the sticker shock of, oh, I'm getting this much an hour, and then you look at your paycheck and see how much the government took, yeah, you're getting taxed. You get taxed on your sweat and your labor, and the government will take a cut, as you've noticed. The government is still going to take a cut with unearned income, with your gains or your capital gains, but it's going to be taxed at a much lower rate. So that's good news, right? Now, a lot of people put their money in retirement accounts to manage the taxes a little bit differently. So if you have a 401k, I'm not going to get deep into 401ks. 401ks were never, ever, ever meant to be your sole source of income in retirement. 401ks are not going to do better than the S&P 500. There's fees. I'm not a fan of 401ks. I am not a fan. A lot of people say, hey, but if I put $100 in, my company is also going to put $100 in. I get it. It's free money, but there's nothing free. There's always strings attached. And if you do your own research, and I'm here to just give you a little bump up. You always got to do your own research. But somebody doing a self-directed account versus a 401k is typically going to do better, even with the free money. The free money just helps offset those fees. But in any case, if you put money in a 401k, if you put money in a traditional retirement account, if you have money going in a 401b and all of those retirement accounts, you are deferring taxes. You're not paying taxes right away. Let's say you put $1,000 into a retirement account, and then 40 years later, that $1,000 grows to $50,000. You're going to get taxed when you take money out. So you'll get taxed 50 years later only as you make those withdrawals. Now I want you to think about it. Would you rather get taxed on $1,000 or would you rather get taxed on $50,000? Okay, so there is an account in America. I don't know about other countries. Do your own research. It's called a Roth IRA, ROTH, Roth Individual Retirement Account. And in that account, you pay the taxes on the $1,000 up front. And then 20, 30, 40 years later, when that $1,000 grows to $50,000, you can take the whole $50,000 out with zero taxes. So think about that. There's a lot of rules. There's a lot of research to look into. If you open a Roth account, you cannot take the money out for at least 5 years. And you need to wait until you're 59 and a half. You need to meet those requirements. There's a few exceptions, a few loopholes. You've already been taxed on the money. If you need some money for an emergency, you can withdraw what you put in, but you can't withdraw any of the gains. So those are different opportunities to still work with an investment account to manage taxes. So basically the three ways are: after your money's been taxed, because you know your paycheck that you get, they've already taken taxes out. So you take money that's already been taxed, put it in an investment account, and as the gains grow, you're going to get taxed on that, but at a lower rate. 2, don't take the money out that's already been taxed. Just tell your employer or transfer it before it gets taxed into an individual retirement account. Or 3, after the money's been taxed, you got your paycheck, say, hey, it's already been taxed. I'm going to put it in that Roth, and I never have to deal with the taxes on it again. So 3 options in simplistic mode. You can do a combination of the 3. I do a combination of the 3. Okay, so that was one question. Another question that a few people asked me is, and this is the one you've been waiting for, is this the right time to get into the market? The market's now going crazy. Is it the right time? I don't know. Should I wait? Should I wait? All right. I had a few people ask me this. One person has been here for years and hasn't opened the account. When is the right time? When you're dead? Come on. The best time to open your account is yesterday. The next best time is now. That is always the answer. That's always the answer. When is the best time to plant a tree? If you want shade in your retirement, probably when you're born, probably when you're 7 years old, 10 years old. In the past, the best time to plant the tree that's going to grow into a huge oak and give you shade in your retirement is in the past. The time has passed. The next best time is right now, is today. What are you waiting for? Are you going to plant the tree when you're 50, like I started, 60, 70, 80? If you plant the tree when you're that old, you're not going to have a lot of shade in retirement. Now, if you didn't do it yesterday, if you didn't do it in the past, the next best time is now. Do it now. That's it. That is always the answer. Oh my gosh, you guys. I don't need to do this. I don't need to be here. I have been contracted as a coach. I get $200, $400 an hour for classes. I'm doing this for free because it's on my heart to help people get freedom. Faith, finance, freedom. And it's biblical. So let me just go right to a few scriptures, only two. Luke 19:13. And Matthew 25:14 through 30. Go ahead, write it down, look it up. I'm not going to read the whole thing. You do your own research. Don't take my word for anything. Get your Bible out, read Matthew 25:14 through 30, and Luke 19 through 13. Luke 19 through 13 says that a nobleman went to receive a reign, a kingdom, and then to return. Who does that sound like? If your faith is based on a book called the Bible, you know who that's talking about. A noble man went away to receive his kingdom and is coming back. Who does that sound like? Jesus, right? So Jesus coming back. That's our hope. In the meantime, what are we going to do? Let's see what he says. He gave them minas, which is a form of money. And he said, trade until I come. Are you trading? He said, trade until I come. Why did he say that? Because he wanted to supply those he left behind with what they needed for abundance. It's like, here you go. The 3 minas was 3 months' wages. So that's a significant amount. I'm going to ask you, have you saved up 3 months' wages? They say you should have a 6-month emergency account saved up. You've heard it. I've heard it. Have you done it? Or are you in debt? Is your 3-month wages being a debt slave and making other people rich? That's why I've been here. I have helped you right in this group. Several people pay off tens of thousands of dollars, pay off debts. Last month, Lori paid off one debt, and she said the next debt is coming off, like right after that 30-day challenge that I did with you, with that money. Paid it off. What are you going to do with part of that money? Here's what I did. I put it into trading. I'm going to trade until Jesus comes back. I'm going to trade. I'm going to build a financial legacy for myself, for my husband who went out to work and sweat while I stayed at home homeschooling, and to build a legacy for my children and to be here for you and encourage you from the Bible. Trade until I come. So have you started? Then start. Okay? And yesterday I said, just buy one thing. That's how I started. I bought one little thing. Matthew 25:14 through 30 is about the talents. You guys, I've told this story before. I've referenced it. If you've ever read your Bible, you know the story. All right, I'm looking it up right here. Matthew 25. The master was going to leave. Matthew 25:14. Here we go. All right. It's like a man going away from home and called his servants and delivered his possessions to him. Sounds kind of like the same story. A noble man is going away from home, calling his servants together, and to one he gave 5 talents, to another 2 talents, to another a single talent, each according to his own ability. All right, talents are money. You can use it as an analogy for a skill set or a talent you have. That's fine. And I'm going to skip down to the end. There was one person, when the master came back, he was like, oh, yeah, I didn't do anything with it. I just hid it in the ground. I just covered myself up. I just went in the corner and hid and did freaking nothing. Nothing. And what did the master say? You wicked and lazy servant. You knew that I reap where I have not sown and gather where I have not scattered seed. You should have at least put my silver with the bankers. You could have at least put my silver with the bankers. Then it would have received interest. All right, now think about what you're doing with your money. Are you at least getting interest? Do you have it in a CD or a money market? At least that, so it can earn interest. Or are you paying interest to the bankers, to the credit card companies, to the car loans, to the mortgages? Are you paying interest or learning interest? Now, if you've just come to this group and seen me for the first time, I don't want to beat you up. But if you've been here for a long time and you still haven't done anything, smack yourself. Wake yourself up. Pinch yourself up from the dream. And don't be a wicked, lazy servant. Do something. Face your fear. Please, please. I don't... All right. I was fearful too, but I went ahead and did it. I put $100 in, and I knew that if I lost the whole $100, we would still survive. We'd have a roof over our heads. We would still be able to have our next meal. So do it, because I'll tell you what, I know, you and I both know, you're wasting money on something. You're going through Starbucks, or you're going to McDonald's, or you're just buying convenience foods that you know aren't even healthy for you, but are actually more expensive. You know you have the money. So there is no excuse. There's no excuse. I'm going to talk to you about trading. Now, the stock market did not exist as we know it today until, goodness, it was, I actually had a chart up here for the stock market, and the stock market, I gave you this website yesterday. It's called TradingView. 1871, if you go to TradingView. They started recording the stock market in America in 1871. And then right before 1871, they have a little picture of a dinosaur. But stock market, the trading, the preliminary to the stock market was around in Jesus' time. They traded. They bought shares in companies. And they got money for it. Go all the way back to ancient Greece and Rome, 500 years before Christ, 800 years before Christ, and then going all the way back to Babylonian times, Babylonia and Assyria, 2,500 years before Christ. People were trading. So this is not a new thing. It's been around since all of recorded history. So the market's crazy right now. Is now a good time to go into the stock market? What's going to happen? Is the stock market going to disappear tomorrow? I don't think so. It's been around since pretty much most of recorded history. Nearly 99% of human recorded history, there's been trading. It's not going to disappear tomorrow. Now, let's talk about losing money. In the stock market, if you put $100 and you buy a share of a company for $100, let's say you buy one stock that costs $100, and let's just say it was for the S&P 500. Now, I think the S&P, one share of SPY, that's a stock that just trades the S&P 500, the basket of 500 companies. I think it's around $550. So let's say you got a good deal and bought 2 of those shares for $1,000. It's going to pay you a small dividend. It's going to pay you back. And let's say you bought it at the height of the market, and then all of a sudden there was a market crash, and now that $1,000 is worth $750. It's a 25% drop. Now, I want you to think, if you put $1,000 in and you woke up the next morning and you saw that $1,000 could only be traded for $750, your heart would probably drop. If you've never been in the stock market, you'd be like, oh my gosh, I just lost $250. You didn't lose it. You would only lose it if you panicked and sold. Okay? And you're still receiving the money every month or every quarter. It's still paying you no matter how much you paid for it. Let's look at it with a home. Let's say you're buying rental properties and you bought a house for $100,000 and you have renters that are paying you $1,000 a month. Okay? Now, if you live in a house, if you own a house, and if you're as old as I am, chances are you've seen the value of your house go up and down. We paid with land and building the house back when we got married. I don't know, maybe we paid $200,000 for the house. It went up to $400,000. Did we make $200,000? No, we're living in the house. We're not going to sell it. We didn't make anything. And then it dropped, and that's when people were underwater in their mortgages and they panicked and sold. Then the value of our house dropped to $180,000. Did we stress and say, oh my gosh, we just lost $20,000? No, we're living in it. And if you had that rental, if you bought that rental for $100,000 and your tenants are paying you $1,000 a month, and then all of a sudden there's a market crash and that house is only worth $750,000 instead of $100,000, did you lose any money? Or are you still collecting the rent? You're still collecting the rent. You're not worried if the value of the house goes up or down because you're getting a cash flow. And as a matter of fact, if that house that you bought for $100,000 that you have a renter in, if it dropped to $75,000, so many numbers, you bought the house for $100,000, then it dropped to $75,000. Forgive me with numbers. I talk a lot and I hope you know where I'm at. If that happened, wouldn't you do everything you could to buy another rental property because you know you could get $1,000 rent, but you're putting in less of an investment? I hope that makes sense. This is how it is with stocks that pay a dividend. You want the dividend. You want the money. You want the income. So when this market crash happened, I'm like, dang, let me sell whatever I can. Let me sell a piece of furniture because there's a huge market crash and I'm going to buy everything up on sale. That's how it is. Now, what about when the market was at the top? I was still buying. I was buying at the top. I was buying at the bottom. It's called dollar cost averaging. You buy every month or you buy every week. You just buy something all the time because, to go back to that question, is now the time? You're trying to time the market. Nobody times the market unless you're the big financial companies and the elites and the billion-dollar people that manipulate the market. Okay, then you can time it because you're insider trading. We're not those elite rulers of the world. We're just regular people. I'm a regular person. And you don't time the market. You're steady and consistent. And over time, those fluctuations are not really going to matter. Now, I did this chart. Maybe I can do a Zoom call with you guys and share my screen, but I looked at the market crash back in the 1930s, and it's extreme levels. Here's the market's going up, up, and then crash. People jumped out of high-rise buildings. They lost everything. But when we stretch that timeline out from 1871 to today, that market crash, boop, 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 like you can barely see it. It's just a little line. So it's crazy, but we're not timing the market. I'm not timing the market. I'm steady and consistent, and that's what wins the race. And as I said yesterday, it is a marathon, not a sprint. So I think I'm done. I told you I was going to review. We reviewed. I told you what was next. UTMA for your children. I answered some of the questions that people sent me and put in the group. Please continue to put questions in the group. If you don't want your name attached to it, there is an anonymous option. You can make your question anonymous. Put it in the group. It's going to help other people. We had our scriptures. And I told you results that people have gotten just here in the free group. And some people have sat in the free group and done nothing. You have to invest the time in yourself. And sometimes you have to invest the money if you're not getting results. If you're not getting results working out, hire a personal trainer. If you're not getting results with your diet, hire a nutritionist. If you're not getting results with your health, go see a doctor or a chiropractor or an acupuncturist or an occupational therapist. Find somebody. What is a priority for you? And if your financial future is a priority for you and you're not getting results, there are people in this group that have hired me. I'm a coach with Destiny Global, and I'm not gonna be there forever. I don't need to do this, but they charge a couple $100 for me for packages, for getting out of debt. Gloria, Kimberly, Grace spent $2,000 for that package. They spent $2,000, but they shaved tens of thousands off of their debt. So think about that as an investment, whether you invest with me, another financial coach, in your health, or your personal trainer. They spent $2,000 on a package and saved $10,000. That's a pretty good deal to me. If I could give somebody $2,000 and they could give me $10,000, I would be like, where do I sign up? Cassie, she wasn't worried about her debt, but she could not break through her glass ceiling at work. She couldn't break 6 figures a year. It was a mental thing. She hired me and broke 6 figures. It is a mental thing. It really is. And I apologize to you guys for my mistake in just giving you the facts, because we're humans, we're women, we're emotional, and sometimes just the facts don't do it for us. Sometimes we need the faith, the belief, the hand-holding. And if you need that and you've been stuck, I may consider doing a group for the investing to get you started, to get you going. The group that I'm in, Hans Johnson True Wealth Formula, I gave the book out in our last challenge. He's my mentor. There are people in that group that have wanted to pay me for coaching to help them in that group, but they're already paying for coaching. So if there's interest in that, I will consider it. My time is valuable with my family. I've got to set up a schedule. I've got to invest myself in my clients. That's what I do. I give a lot of time, heart, and soul because I want you to succeed. And if I do this for free, imagine what I do if you've got me on speed dial, if you've got me there one-on-one to really delve into what is holding you back. So that might be an option. I do have one particular person who's like, please start this group. I want to pay you now. So we'll see. But start now with what I gave you. That will move you on. All right. I don't know how long I've gone. More questions? I'll be back tomorrow with another live. If you have more questions, keep doing what you're doing. And Missy is here. She's watched the whole thing. Missy, I know that you are taking action. I know you're getting results. And I know you're putting the time in. I know you're putting the effort in. I know you're putting the money in on coaching. And you're doing it. If it feels too slow for you, Missy, it will ramp up. It starts out slow and then it goes faster and faster. You're doing amazing. You're doing amazing. I see what you're doing. I see what you're growing. Those seeds that you're planting and that effort that you're putting into it is paying off. I'm super proud of you. I'm super proud of you guys for being in the group. Baby steps consistently over time is a lot better than just a huge, gigantic step and then doing nothing after that. Consistency over time, marathon, not a sprint. I love you guys. I'm praying for you guys. I'm on your side. And I'll be here to answer your questions. All right, see you later.